Today, Bitcoin falls to the $100,000 level. The first ever spot XRP ETF in the US starts trading on the Nasdaq. And Roshan Robert, the US CEO of OKX, breaks down a new decentralized exchange trading feature on the platform's app. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Major cryptocurrencies trading lower as of midday, along with stocks, with technology weighing on the major averages. Investors are also growing pessimistic about the prospect of lower interest rates, even as the U.S. government reopens after a record-setting shutdown. As of noon Eastern, Bitcoin fell to the $100,000 level, and Ether dropped about 2%. One standout, though, XRP, which rose more than 2.5%. That came as Canary Capital's XRPC, the first U.S. spot XRP ETF, began trading on the Nasdaq. All right, let's talk about the top stories. Grayscale has filed to go public in the United States. In a press release out this morning, the digital asset-focused investment firm said it filed its S-1 with the SEC, targeting a listing of Class A common stock on the New York Stock Exchange under the ticker GRAY. Grayscale said price and size of the offering were to be determined, and the listing is still subject to market conditions. Grayscale is, of course, a pioneer in crypto investment products like the Grayscale Bitcoin Trust. Its fight to bring that trust to market as an ETF cleared the way for a number of other spot Bitcoin funds to launch in 2024. Since then, BlackRock's IBIT has surpassed GBTC in assets under management. At the same time, Grayscale has introduced other products like a Solana ETF with staking rewards, which began trading in October. Next, SEC Chair Paul Atkins rolling out a new approach to crypto tokens for the agency and throwing his support behind Congress's efforts to pass market structure legislation. In a speech delivered to the Federal Reserve Bank of Philadelphia yesterday, Chair Atkins laid out what he called a coherent token taxonomy. He shared 4 classifications and whether they were securities. First, digital commodities or network tokens like Bitcoin are not securities, according to Atkins. He said the same was true for digital collectibles and digital tools like tickets or credentials. The 4th classification, though, tokenized securities that represent ownership of a financial instrument, are considered securities by the SEC. Now, in the same speech, Atkins said the agency would continue to work with the CFTC, banking regulators, and Congress to ensure crypto has a proper regulatory regime. He said the SEC will continue to support Congress's efforts to pass sound market structure legislation into statute. For our main story, today OKX introduced a new decentralized exchange trading feature on the platform's app. The development allows users to get access to decentralized markets on Solana and Base directly from its centralized exchange. This afternoon, I spoke with Roshan Robert, the U.S. CEO of OKX, about the new feature. He explained how it works and why the move is important. OKX is taking a big step toward bridging centralized and decentralized finance. Now, OKX users will be able to trade directly across both centralized and decentralized markets in one app, and it all kicks off right here in the U.S. The platform is now giving customers access to decentralized markets on Solana and Base directly from its centralized exchange. Can you take us through how this new feature works? What are some of the key features?
Indeed. So the new product is called CDFI. What we're doing is we're essentially providing a window into the world of decentralized finance for all of our centralized exchange customers. And this is our way of actually bridging CFI and DeFi using one single app, but making sure that all the controls and security, etc., are still in place. It is a way in which centralized exchange customers who come in through proper KYC into the centralized exchange not only have access to all of the products and services that exist in the centralized exchange, but with the way in which we've constructed the app, they can actually sort of really go into a self-custodial wallet, and through the self-custodial wallet, access all of the products and services in the DeFi ecosystem as well, especially on Solana and Base.
Now, decentralized exchanges process billions of dollars in monthly trading volume, and many new token listings debut on DEXs before centralized platforms. So Did that weigh in your decision to launch this new feature? And generally speaking, why was it important for OKX to offer this to users, especially now?
We've been looking at how the DeFi ecosystem is actually being adopted by customers around the world, and while we have some market stats available as far as the compounded annual growth rate of the DeFi ecosystem, which is at around 40 to 50% growth year on year, internally, we've been seeing amazing levels of adoption. We've seen around $80 billion worth of volume going through our own OKX DeFi ecosystem. And we've seen nearly 4 million wallets being active on a daily basis. So it gives us time to sort of really pause and understand, yes, this is where a lot of the new world of finance is moving. And as technologists, part of what we're trying to do is how do we abstract away the complexities that don't allow regular users regular users who want to access this new world to get into this new world. So what we've done is abstract away some of the complexities, which include how do you pay gas fees, how do you get a wallet that is really easy to use with instead of seed phrases have passkeys available. So we've gotten all that abstractions done. We've abstracted away the complexities, and we've allowed users in a simple way access into the DeFi ecosystem.
Turning to regulation here in the US, right now there is no unified federal framework for DeFi, but we are seeing some developments for crypto on Capitol Hill just this week with the Senate Agriculture Committee releasing a long-awaited draft of its crypto market structure bill. Now, the draft provides clear regulatory guidance for some cryptocurrencies. It also gives the CFTC more power over the digital asset space after the SEC for years took a strong stance on regulating crypto. So what's your reaction to developments like this, and what would you like to see as it relates to crypto market structure?
I think there's going to be a number of iterations as far as the market structure bill is concerned. I've seen the latest draft that came from the Senate Ag Committee, and I think it follows the lines of it follows expectations as to how we have thought that this bill will evolve. Right, like there's going to be CFTC has been given a prominent role, which I think is good. We've also seen that there is a focus on client money segregation, which is a good thing. But there's also a huge piece out there that is probably missing right now, but is open for comments as this bill progresses, which is around DeFi, right? And I think as we continue to expand here in the US, we hope to be part of the conversation as far as comments and suggestions and lending our expertise in development of a framework that is suitable for this ecosystem.
Focusing on your US expansion, back in April, the International Crypto Exchange, which was established in China more than a decade ago, announced its launch in America. You also launched a regional headquarters in San Jose, California. Now that it has been more than half a year since your US launch, how's it going?
It's actually going brilliantly well, to say the least. In fact, we have continued to expand here in the US. I'm seeing tremendous growth as far as customers onboarding are concerned, both on the retail side as well as on the institutional side. Like I said before, we have continued to expand our products and services. We now have a unified stablecoin order book, which is good. It is something that a lot of traders and customers are looking forward to because the liquidity is really, really awesome. We have expanded payment options like Apple Pay and Google Pay. We recently introduced the USDG rewards with a 4.1% yield. And more recently, we introduced tools for advanced traders, which is, we've got trading bots that can be used by advanced traders, and that's becoming increasingly popular as well. So we are slowly trying to, carve a niche for ourselves in this space. And I think US customers are getting to know us, and they're getting to know us as a trusted, compliant exchange, which is important.
Now, before I let you go, what's your outlook for major cryptocurrencies like Bitcoin as we approach the end of the year? Curious for your take, especially because you are involved with the crypto exchange.
Thank you, Talia. My view is we've seen some volatility recently, right? And that's because crypto as an asset class is still a high beta asset class. So some of these macro changes in economy that happens will tend to magnify itself when it's pointed to a high beta asset class like crypto. But I think most of that volatility is cyclical, and the foundational strength of Bitcoin and Ethereum and the larger crypto industry is now set in stone. So I think that foundational strength is also something that has been that is now recognized by the larger institutional space as well. So I think Bitcoin will go from strength to strength. Albeit there will always be a little bit of volatility.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.